I opened accounts at 7 different brokerages and invested real money in each one. After 3 months of testing, I found one clear winner for beginners, and it's probably not what you think. If you're about to open your first investment account or you're frustrated with your current broker, this video could save you thousands of dollars over your lifetime. Let's dive into exactly what I discovered. Here's how I tested these platforms. I deposited $1,000 into each account. I bought index funds, individual stocks, and ETFs. I called customer service with beginner questions. I tested the mobile apps during market hours. And I carefully analyzed the fee structures, because even small fees compound dramatically over decades. The 7 brokers I tested were Fidelity, Charles Schwab, Vanguard, E-Trade, Webull, Robinhood, and Interactive Brokers. These represent everything from established financial institutions to modern app-first platforms. Let's start with the big 3 traditional brokers: Fidelity, Schwab, and Vanguard. All 3 offer zero commission trades on stocks and ETFs. All 3 have excellent reputations and strong financial backing, but they're surprisingly different in practice. Fidelity impressed me immediately with its interface. The website is clean and modern without being oversimplified. Their mobile app strikes the perfect balance between beginner-friendly and feature-rich. But here's what really stood out. Fidelity offers 4 zero-index funds with literally zero expense ratio. Their FSROX fund tracks the total U.S. stock market with no management fee whatsoever. If you invest $10,000, you pay exactly $0 in annual fees. Compare that to some funds charging 1% annually, which would cost you $100 per year on that same investment. Fidelity also offers fractional shares on stocks and ETFs, meaning you can invest $20 in Amazon or Google without needing to buy a full share. For beginners with limited capital, this is game-changing. You can build a diversified portfolio with just $100. Charles Schwab came in as a very close second. Their platform is equally intuitive, and they offer the Schwab S&P 500 Index Fund, ticker SWPPX, with just a 0.02% expense ratio. That's $2 annually per 10,000 invested, essentially free. Schwab's customer service was outstanding. I called with a basic question about Roth IRAs, and the representative spent 15 minutes walking me through contribution limits, income phase-outs, and tax advantages without ever making me feel stupid for asking. Schwab also has over 1,600 physical branches, if you prefer face-to-face support. For some beginners, that peace of mind is invaluable. Vanguard is the grandfather of low-cost index investing, founded by Jack Bogle, who literally invented the index fund. Their funds have rock-bottom fees. The Vanguard Total Stock Market ETF, ticker VTI, charges just 0.03% annually. However, their website and app feel dated compared to Fidelity and Schwab. Navigation isn't intuitive, and the mobile experience feels clunky. If you're tech-savvy and prioritize absolute lowest costs, Vanguard works. But for true beginners, the learning curve is steeper. Now let's talk about the app-first platforms: Robinhood and Webull. These attracted millions of young investors with sleek designs and zero commissions. I'll admit, both apps are beautiful. They feel like social media apps, which makes them less intimidating than traditional broker websites. But here's the problem. Robinhood's gamified interface encourages active trading, confetti animations when you buy stocks, push notifications about market movements. These design choices subtly push you toward trading more frequently, which statistically reduces returns for beginners. The research tools are minimal, there's no retirement account options beyond basic IRAs, and customer service is essentially non-existent. I tried reaching support and waited 3 days for an email response. Webull is similar, but offers slightly better research tools and extended trading hours. However, it suffers from the same issues: limited educational resources and an interface that encourages trading over long-term investing. E-Trade falls somewhere in the middle. Good platform, but nothing exceptional. Interactive Brokers offers incredible tools for advanced traders, but is absolutely overwhelming for beginners. I wouldn't recommend it unless you're already experienced. So what's my final recommendation? For most beginners in 2024, Fidelity is the clear winner. You get institutional quality research, true zero-cost index funds, fractional shares, excellent customer service, and an interface that grows yes with you as you learn. Open a Roth IRA if you're eligible, which means you're earning income and making under the IRS limits of $161,000 for married couples or $146,000 for singles in 2024. Here's your action plan. Go to Fidelity's website today. Open a Roth IRA, which takes about 8 minutes. Fund it with whatever you can afford, even if it's just $50 to start. Invest in FSROCs, their zero-fee total market fund. Set up automatic investments of $25, $50, or $100 per month. Then forget about it and let compound growth do the work. If you invest $300 monthly starting at age 30 with a 7% average return, you'll have over $370,000 at retirement. That's the power of starting today with the right platform and the right strategy. Stop overthinking it. Pick Fidelity, invest in a simple index fund, automate your contributions, and focus on earning more income. That's how you actually build wealth.